Bitcoin crossing back over the 40K mark, the ruble crashing, and Putin not backing down amid sanctions. I'm Natalie Brunell for Bitcoin Magazine, and we're following the latest developments in the Russia-Ukraine crisis. Now, as many experts predicted, the ruble crashed overnight against the dollar, and there have been videos shared on social media of bank runs in Russia where citizens are experiencing shortages and a limit to how much cash they can withdraw from their accounts. The Russian central bank also hiked interest rates from 9.5 to 20% to cushion some of the blow of the ruble's crash. Now, this once again demonstrates the value of Bitcoin being a decentralized asset that can be custodied directly by the owner and transacted in lightning speed across borders without permission or censorship. According to Zero Hedge, which cited Russian media, Russia is working on a digital one world, one currency for trade. And we already know that the country has been developing a digital ruble and its own SWIFT system for years. China also doing the same with a central bank digital currency and its own SWIFT. So in real time, we're watching nations de-dollarize and strategize ways to transact and store value in assets other than the current global reserve currency. I actually mentioned during a news segment that Russia has built up more than $600 billion in reserves that are made up of gold and foreign assets, which suggests that the country has been working to prepare itself financially for the fallout of economic sanctions for years. In fact, although the ruble's value dropped about 30% today, given the severity of the crisis and the fears surrounding the war and Russia's removal from SWIFT, that actually isn't as bad as the ruble crashed in other crises in past decades. I do want to also note that the sanctions currently in place have a myriad of exceptions and exclusions, the biggest of which is transactions for oil and gas, the energy sector, because of course, Europe and the US are so dependent on these. This is all setting up an important fracturing of our current global financial system. Back in 2015, Russia conducted about 90% of trade transactions, also referred to as bilateral transactions in US dollars, whereas that number by 2020 had fallen below 50%. So again, this suggests that Russia has been strategically moving away from the US dollar, which finds itself in a weakened position due to our fiscal irresponsibility and our assumption that we would never lose the status of the world's superpower. And we've been assuming that despite shipping most of our capital and manufacturing power outside our borders via the trade deficit spurred by the petrodollar and inflating our equities market at the expense of the labor force and the average American. So for Bitcoiners, Putin's move away from the petrodollar is a significant seismic shift. It's game theory in action and poses many questions as to how Bitcoin may come into play. Now, remember, Russia has said it's going to regulate, not ban cryptocurrency and wants to have more oversight over who buys digital assets and how much. And Putin also recognized back in January the country's competitive advantage when it comes to Bitcoin mining due to Russia's energy resources. But at the same time, Putin's regime will likely want a cryptocurrency they can actually control and monitor in the same way China is planning the digital yuan. Meanwhile, we know that Ukraine has the largest Bitcoin treasury of any nation, and we've been reporting on donations made by the public to not only the Ukrainian government to the tune of about $20 million in Bitcoin as we publish this video, but also people have been sending Bitcoin directly to refugees who are fleeing the country and the violence that has broken out in major cities. So Bitcoin may not be directly named in every headline, but it is so relevant in all these geopolitical conversations that impact real people in real time all over the world. We will continue to follow the latest out of Russia and Ukraine and bring those updates to you here and on bitcoinmagazine.com.